So we'll just start in a second, just waiting on a few more people. All right, I'll start the webinar, and as people join, I guess I can just watch the recording. Hello all, my name is Arjun. I'm running the webinar for CAD Group. The topic today relates to the cost management function of Autodesk Construction Cloud, which for the purposes of the webinar, I will shorten to ACC. In this webinar, we will go over the 5 main principles we look at when guiding and supporting our clients through the cost management section of ACC. I strongly believe that applying these 5 principles with ACC will set up any company for sustained long-term growth. The format of the session will be broken down into 6 distinct parts. I'll give a quick introduction of the company and myself. We'll spend the bulk of the time on the topic and then open the floor up to the questions that people have asked at the end. And finally, fill everyone in on the upcoming webinars that we have coming up. With the pleasantries out of the way, I'm going to jump into the introduction. We at CAD Group are a customer-centric company with over 34 years of history and tradition dedicated to understanding and servicing the technological needs of our clients. We partner with industry leaders such as Autodesk to provide meaningful technology solutions to our clients and craft long-term bonds that benefit both parties. Lastly, we are not only resellers, we have an Australia-based technical support team that span from the East Coast to the West Coast, and this team services everything we implement. Quick intro for myself. I have over 15 years of construction industry experience, which is mainly in the luxury, residential, and development sectors. I started off as an estimator, and I've spent most of my time in the project management and operation roles. Now onto the spotlight. The 5 principles that we work with our clients to really hone in on are these that you can see here. I'm going to go through these in summary first, and then we'll break them down into the different levels. The first is to standardize your cost or work breakdown structures into at least 4 levels. Now this applies to every company that plays a part in the project management space, and also all levels of companies, starting from single skill companies like architects and electricians to builders of various sizes, and lastly, the most complex developers that have multiple levels of stakeholders and stages of projects. The second one is to reduce your risk by automating your workflows and data flows. Now, this may sound simplistic, but we have found that the companies that experience the most margin erosion are the ones that have disjointed workflows or rely on key personnel to never take a break and to not take any sick days. I will showcase setting up workflows for things like the Securities of Payments Act, but also highlight setting them up as roles rather than individuals to initiate and approve the workflows. This allows organizations to temporarily or permanently promote people using the permission structures of an organization, and this can also be done on a global and project level. The third principle is to use cost management as a single source of truth. It is not sustainable for growing businesses to track things via manual input into various spreadsheets or tabs that track subcontracts and progress claims in one spot, and then if someone else adding or managing payments out in some other place. This can also be in Xero or another spreadsheet. This is a disjointed system where your construction team and your financial team do not have a single source of truth, and that leads to wasted time and energy where people are pointing to information on their own silos and you're not talking on the same playing field. The fourth point builds on top of the previous two mentioned. Maximize the benefits provided by the ACC Common Data environment by linking in not just other facets of construction, but also other softwares. We are currently working to support a D&C company that starts projects all the way from Revit and takes them all the way through the ACC suite to cost management. Surprisingly, it's the design team that are benefiting the most out of cost management, as they're able to see the client contracts and the budgeted hours, and they're able to raise issues with time and tracking much earlier than they could previously. And that is leading to a positive effect with the senior management, where they're able to have conversations with clients, but also downstream with their actual people, and they're able to take steps to resolve issues a lot earlier. The last one is probably the most powerful. Cost management allows you to link schedules created from the likes of MS Project, Primavera, and Asta projects against milestone amounts or budgets. If kept up to date, this is a very powerful cash flow tool that ensures both the project viability and makes sure everyone is paid on time. Now, looking at the cost breakdown structure, the most common breakdown structure we find in the companies that we work with is generally two-tiered. It's got your trades at the top and just their budget at the bottom. Some of the more advanced guys, if it's on the resi side, detail that out a little bit more to more line items. And your bigger guys generally like to keep that as one big lump sum and to track it as a contract. Now, this has very, very limited upside. The cost code structure is generally unique to that one project and it's not standardized. Because there's not enough layers, the upstream reporting is pretty much your level 1 codes, and that means your closeout reports get very, very clunky and get very, very long. Additionally, with two-tier cost code structures, if there is a variation or an extra stage added to the job, you're generally doing this as a very chunky variation, or you're having to start a new project, which means you're losing efficiency and you're trying to track costs over 2 projects and you're not getting any value out of the system. We recommend companies use at least 4 codes, even if you're a very small company. If your company goes through the design, tender, procurement, and warranty stages, these should have their own distinct tier structures, and your trades and their activities and item levels should be working under them. I'll show you an example here. This is a demonstration project that we have set up. in the settings tab and the budget tab, we have multiple tabs, but essentially it is a 4-tier breakdown structure. The first tier is all about stages and it's left fairly blank. You can go down as many as you want. It's got 3 characters, and that could be working with a developer that wants to do multiple stages on a project, and they're just waiting on certain stages to finish before they start the next stage. Phases relates to the area that you're in. This probably relates more to developers, where they actually have the various stages of feasibility, design, tender, procurement, construction, and handover. But it can be left there as a redundancy in case a smaller company gets a more complex project and you want to have access to this. The brains of this is the division structure. Now what we have here is a 5-character structure, and we've actually built out the actual sub-items using the add sub-item tool. The reason why we do this as sub-items and not adding an extra tab is adding sub-items allows you to limit the names to the main heading. If I were to add it as a separate tab, you could have concrete showing up in preliminaries, and you're starting to add unwanted items and complexity to your code structure. Items are pretty much your line items that you want to have in the division. Smaller companies or residential companies that need to break down their cost code structure would have things like, if I use concrete for an example, would have supply of concrete, supply of Rio labor, concrete labor, formwork supply, formwork labor. Your larger companies are probably tracking these as package levels, so you probably would have a concrete package, a formwork package, and a Rio package. Lastly, the categories are your types of contracts that you can have and the items you want to break them into. So here you got material, labor, equipment, subcontract, and other. There's one that's just been added as 100, and that's probably just someone who's been playing in this and they've added an extra budget item. If I click a lock, you will not be able to add codes outside of this structure. The fact that this is unlocked, people can add additional items and modify the descriptions. Lastly, with this structure can be added into a project template, which means all future projects built off that template will have this cost code structure built into it. If I go to a budget here, I've just added a simple cost here, and I can show that it's in stage 1, feasibility, prelims and overheads, and there's design fees of $50,000. I can group by the various options on the side here, and this is where, depending on the user, you will group by different formats. These groups will always appear as default as the last group you've set up. A project coordinator or a high-level PM would probably be looking at it on the division level and really not work their way down into the line item or sub-item level, as long as these costs make sense. A CA probably will be going down into this level, or a project coordinator, project admin would definitely be going down to these levels. And if you need to break this down into additional items, if you go into edit mode and go into the actual item, you can break these down even more and change their names as well. But I could add a sub item and break this thing into 2 $25,000 parts if I wanted to. Moving on to the second principle, which is automating your workflows and your data flows. This has two parts to it. Your company probably has standardized workflows and data flows, but also there could be regulatory workflows that you want to create. The most important one or most common one is security of payments. It's going to go back to the slides. That's missing. Regardless, there are a couple of main workflows which I'll go over. The main ones are purchase order and scope of works approval workflows. This relates to CA setting up subcontracts and forwarding them to, for example, the project manager to review and approve prior to sending them out. If I go to settings and go to cost, we have workflows here. Now, this is a two-step workflow, and this applies to every single contract. Once again, we have names here. It's better off if we apply them by role and use the names to add by exception. Additionally, there are AR progress claim workflows. These are upstream progress claims made by your company to clients. You'll find these in the budget section of cost management. And once again, this is a two-step, but you can set it up to all the various types and add your various people. Once again, this is the reviewers here are individual. You generally want these to be done as roles. Now there is one additional part here. There are two items. You can have submitted and approved. So the status of this, if it's going to another approver and you actually have a third party on here, prior to it being submitted and you want to review internally, a project admin can submit it to the project manager who then approves it, which would then change the status to submitted, or the approver, which could be the client, to approve. Accounts payable workflows. These are your workflows which would be in cost generally, and they would be downstream guys applying for payments to you. Now these can come via a third-party platform like Xero, or they could be manually added. The process would be the same in terms of a client and a main contractor. You, if you're the hub owner, would be approving these contractor workflows. Variations, which in this situation on the base setup are called change orders. These are subcontractor variations that are coming to you, where subcontractors are applying for variations to their contracts, or they could be OCOs, which is the base name, are owner change orders, where you could be applying to a client to get a variation approved. It could be additional piering, additional concrete works, or unforeseen. You would cost these against the cost codes in your budget. A CA who might be putting these together would be submitting them to the project manager to review before the project manager submits them to the client to approve. Now, there are also miscellaneous workflows which relate to different parts of the software, but they always come down to a cost management piece. If I were to look at this example workflow, in Revit, someone may have added a project into ACC. It's gone through a review process in the design module. It's been rechecked. It's been bridged out to a third party. The model's been consumed in as a 3D model using model coordination. And once all that process is finished, this information is bridged out to a third party. Any one of these areas, depending on the stage you're in, could have a cost associated to it. In ACC, you can link these up to a budget and a cost and charge these out as separate line items. Going back to the Security of Payments Act, if I go to settings and I go to cost payment application approval workflows, what I would set up is a one-step approval. If it's a smaller company, could be multi-step. If it's a bigger company, every cost payment that comes in, I've given the subcontractor the permission structures via subcontract permissions to submit progress claims. I would want to give myself 5 days to review. It's generally 10 business days to actually reply as per the Securities of Payments Act. And you could do that as 14 working days or, 14 calendar days or 10 work days, depending on how you've set up your holiday structure for ad hoc area public holidays. Once again, I would set it up as a role rather than as an individual, and this allows the company to promote people, or if someone is away, another reviewer on the same level with global access can assign that workflow to themselves and go through that review process. Now, you cannot have, at the moment, you do not have conditional workflows. So what you would actually have to do is probably a 2-step workflow or a 3-step workflow, where if a contractor has forwarded their approval workflow to you and you like it, you would then hit revise and resubmit with the comment, contract approved, resubmit with tax invoice and your stat deck. This would then, as long as your work days are set up, would then allow you to meet the Security of Payments compliance. You can also add in special compliance, which can relate to specific contract types, which could be insurances. If the contractor has not added their insurances to the compliance tab as a document, as a PDF, they will not be able to proceed with the progress claim or request for final approval for either a contract or for a cost payment application. Additionally, in this, if I go to the budget and I go to contract types, using this function allows you to customize your view and the way the project works in the background in ACC. If you have a lump sum contract where there's set milestones that don't relate to a budget, you should be using a fixed price contract type, and that allows you to do your milestones. And on that milestones, if there is a variation that's been approved, the variations will appear as lump sum items at the bottom of the contract when you do your progress claims. This will also be the same to your subcontractors. If you have a unit price contract, it's generally going to be a cost plus contract or a contract where you're claiming as you go. If you're claiming as you go, you're generally claiming against budget items. And if you have a variation, the line items in the variation will actually appear against the line item itself, not as a lump sum down the bottom. Moving on to item 3, or principle 3, which is using cost management as a single source of truth. I'm going to go back to the slides. Having multiple sources of truth creates data reliability issues for the company, and also in our experience creates data silos that are the killers for sustainable growth. Data silos and information silos are generally the key reason for margin erosion, and that's why we say have everyone work out of a single source of truth, and make sure that that single source of truth is always up to date and gets checked on a regular basis, and that allows you to access the downstream impacts and the downstream reports and the downstream payments that different areas will be feeding their information from. An example of this would be an ERP system like Xero, MYOB, QuickBooks, and Sage. The accounting people want to be working in their own environments, and they're going to try and pull the project team into looking at information on their side rather than making sure the information is pushed across into cost management. ACC is a very, very open platform. It allows you to connect your third-party ERP systems into ACC, and that means you can automate that process and not have to manually input these things. And this also takes away a potential source of error in your data. ACC is also a very open platform is a very open platform in the way it empowers you to customize your reports. If I go to the reporting tab, if my data is reliable and it's all input here, the base vanilla environment already comes with base templates that are very, very good. And you can plug and play these straight away as long as you're putting all these costs and these costs are flowing in to your system. Once again, the efficiency of these reports will reflect the level of effort you've put in to entering the data and doing your periodic reviews to make sure that that data is right. Going on to the next one, which is the common data environment. I've already mentioned this in the past. The ACC common data environment saves and stores every single piece of input that you put in on a project. That information can be referenced against any form of information in any other field. This includes linking budgets and contracts. If I go to my other project and go to build and go to assets, I've got some pre-created assets and asset categories here. If I go to one of these linked references, I can see what has been linked against the air conditioning system. Now, this is a specification, a job issue, a schedule, which is showing that something is out of date, and I've got a budget and a contract. If I click add references, I can reference a cost payment application as well, a budget payment application, potential change orders, requests for quotes, subcontract change orders, and owner change orders. Now, this is very powerful for mid-tier companies that are looking to grow but don't want to add a lot of complexity to their business, as assets and asset categories don't actually have to be physical objects. They can represent groups of information like timesheets. You could have a category called timesheets, and this specific function of assets is something very, very cool. It allows you to read and scan QR codes with the phone app. Trades or workers on day labor can very quickly scan a QR code that you've created, fill in the information, and hit save on their phone, and that information will get saved against what you've created or put that barcode against. This creates links with cost management, as you can turn these timesheet entries into future payment applications or add them as expenses to be passed on to the client. Lastly, on this topic, the Insights tab. The Insights tab is basically your Power BI tool, and it has a very real connection with cost management. You can connect Power BI into here or use the basic cards, and you can start tracking your project quality, your project controls, and looking at the issues and the costs that relate to them. This tool would be the tool that project managers and project directors would use to show the progress of the project and the health of the project to a board or to a set of directors. ACC is doing monthly updates, or I think it's every 2 months, updates to this back-end Power BI tool. The feature of this is to not actually require Power BI or other third-party BI plugins, and you should be able to use these as a plug-and-play tool. Insights here is based on the project. If I were to go to Executive Overview, this would show insights on an account level, which is a global level. It would be sucking in all projects, and this is where project directors would be reporting on a group of projects that they would have passed out and separated out to do their reporting. Lastly, cash flows. If I go back to build and go to my schedule section, we already have a program that's already been created in MS Project, and different versions of this have been uploaded and updated. People with authority and access can provide suggestions, and these suggestions can be implemented into this MS Project file and re-uploaded. If a suggestion is made and that suggestion is accepted, it doesn't break the schedule. It only updates the schedule, and that creates any continuity issues that may arise from uploading multiple schedules in the future, or creating or adding and taking people out of a project. Going to cost management, I'm going to go to the forecast tool, and because we actually have a schedule that's already created, we are going to add references from Autodesk Build, which will be from the predefined schedule that we've already created. I would not recommend creating these items manually unless it's a milestone-based project and it's only got less than 10 milestones. Otherwise, this can get very complex very quickly, and you're not going to get the output or efficient output that you want. Once these schedule items have been added, I can then link these to a budget, which is imported from the budget tab. If I go back to budget, I think there are only a couple of budget items, so that's why that's only showing a few here. You can add as many as you want here and add sub items and group these and build these out however you want. Linking this budget and schedule allows you to create a cash flow forecast. Now here we've created 6 periods, and what we've done is we've created a budget flow, which in this situation is an S curve, and forecasted out that we are forecasting to receive this money in against these times. Now, actual cost only has one entry. That's why there's only one entry here. But as you create contracts and you've paid those contracts down, these actual costs will populate, and these percentage completes and ratios, as you update your schedule, this will work its way into cash flow and gives you a very good performance tracking measure. I'm not going to go into too much detail here, as this gets very complex very quickly, and for demonstration purposes, it probably would lose its impact. But that is how the forecast tool works. And this tool, if you have the right permission structures, you can give individual access to this, or you can give company level access to this, and you can collaborate with third parties as you see fit. I think we're pretty much completed with the main principles. I'm going to open it up to questions if anyone's got any questions. I think Chandan, or there's 3 Chandans, you've got a question. What happens if a claim is rejected under the Securities of Payments Act? If a contractor has got access to the environment, they will see their audit trail of items, and they will see that the claim has been rejected. They will then be prompted to reply. Now, in this situation, because there's no conditional, how would I say it? There's no conditional workflows. It doesn't go into the complex details of if something happens, do X. It's going to create it in a very general way. They would then need to re-enter their progress claim and resubmit and follow that process again. Are there any other questions? No? Well, I'll just go to the final tab, which is upcoming events. We are doing a in-person masterclass in Sydney, coming up on the 20th of March. This is free. Anyone can enter. I think there's only 20 seats though. It's free. You can enter and you can ask whatever questions you want. The topic is going to be about the assets tab that we talked about. And we're going to go into detail with that, and also show how you can link a Revit model and manage a project in 3D. Under Securities of Payments Act, you must provide an assessment of why the project manager is, what the project manager is certifying. Yes, so what actually happens is when you reject or request a revision, you actually can go through the various line items of the claim, and you will put a tick or a cross against those line items, and you can leave comments against various line items as well, and that will provide the detail for the contractor to either update their claim or dispute what you're saying. Anything else in regards to that, or any follow-up question in regards to that? It doesn't have to be against each line item. You can, if it's grouped up well or broken down well, you can do it up against the high level item and mass tick or mass approve or mass disapprove or reject a whole part. So How is this then certified under securities of payments to become the certified claim? If you've approved the claim, you will then click revise and resubmit. It will prompt the subcontractor and say you've got X with a certain message. You can say you've got 10 days to submit your claim under Securities of Payments Act, and it will include that message to them in the email that goes, in the automated email that goes out to them. Autodesk and ACC are a global player. They generally don't create workflows or off-the-shelf workflows based on region. They like to keep it as general as possible, and that's why we're working with the workflow system that we have. But there is, I believe, and this is safe harbor, that there is potentially conditional workflows coming, and that will allow us to add that level of detail to make sure that securities of payments for Australia is met. ACC must comply to Australian law. I would agree, and I would say yes, but Australia, in the grand scheme of things for Autodesk, is a relatively small market, but we do have access to the ACC teams, and we are trying to create off-the-shelf workflows ourselves, especially when conditional formatting comes in, and the clients that we work with, we build that in with them. So it technically, the long-term plan is for the partners to be able to work with clients and create these workflows and customize the environment to the region. Any other questions? Any other comments? No? So I'm going to go ahead and close this webinar. I hope everyone's had a good time and got some value out of this. And thank you for your time.